Broadcast. I want to welcome everyone to Global Markets Radio Daily Recap. I'm your host, Andrew Spanton. Monday, May the 21st, 2012, 4 p.m. Eastern. What a day. What a day. You're looking at the S&P hourly chart closing relatively at the highs. To the moon, Alice. Coming in Asia last night, as we saw. Breaking lower, only to bottom out. Have a retest. Oh, baby. And then to the moon. And a lot of reports coming out from Europe. I think a lot of that, the reason for the rally, obviously the Facebook glitches. And, I think one of the reasons why we sold off was Facebook, obviously, breaking down well under the offering price. Morgan Stanley. Rape the individual investor. Give it to the new rich. Hey, listen, they did their job. They got the best price they could possibly get. Can't blame them. But who knows what they're putting up right now? Who knows what their book looks like in Facebook? Amazing. The NASDAQ screwing up also. Crazy. So I think a lot of that pressure in the morning, the rolling over, I think that's one of the reasons why. And I think reports, and I've been saying this now, I think I said it yesterday, the only thing that's going to save, and we did have a report that Hollande, the new president, prime minister, France, is going to meet on Wednesday and push the Europeans, the Germans, for a euro bond. My idea is a euro bond backed by gold. Wow. Market would be up 500 points. But Germany is in a major dilemma. And that's what continues to be the problem. The Germans are scared to death. Scared to death of inflation. And they believe that if they flood the market with euros, it's going to lead to rampant inflation for them. Lower exports. Profit margins deteriorate. But what they don't seem to understand is, and I truly do believe this, this is it. This is it for the freaking euro. If they don't do something major and they allow Greece to go in, it's over. It's the beginning of the end. Because years down the road, who knows what Greece is going to look like compared to the other pigs. And those other pigs might be like, damn, we should have done what Greece did. Screw you, Germany. And, there have been talks, Spain almost demanding that the ECB get involved. I think the markets are rallying. This rally continues. I think we're rallying because the markets believe Germany is going to do the right thing. Well, last I checked, history does repeat itself. And last I checked, didn't Germany allow that bank to go out of business in 1931? That actually caused the Great Depression, not the stock market crash, which initiated the Great Depression. Started the ball rolling. Sound familiar? The counterparty risk in the debt that is owed is mind-boggling. It would take weeks. It would take weeks to figure it out. Bank losses in the United States would be dramatic. While they told us that they're not, they are. MF Global. JP Morgan involved with MF Global. Now all of a sudden these bonds are mortgage-backed European bonds? Some of them? Holy crap. If JP Morgan's doing it, who else is? Now we take a look at this S&P. Listen, the euro, we're certainly bouncing nicely. We got some amazing spots. And I hope we get there. 130.50. I think the next couple of days it's only 200 pips, 230 pips. Until this Wednesday meeting, that's it. We're going to probably rally. We are very oversold now. 1, 2, 3, 4, 5, 6, 7, 8, 9, really, 10, 11, 12, 13, 14 days. Yeah, doji here, big deal. I think I counted right. You'd think we'd bounce 2 or 3. Hey, finessed it down and up. Gotta love it. And, Kramer said it. They must issue euro bonds. It's the only way to solve the problem. And you know what? Back it by gold. Wow. Markets would be up 500 points. You would see a rally like we have not seen. If they agreed to just swap all the crap with euro bonds backed by gold, 30-year maturity, bang. And they're idiots if they don't do it, Germany. Well, listen, you look at this euro dollar. There's a very nice double bottom. Very nice double bottom. So I would say we can easily bounce to 130.50, 130 in this zone. Easy. Certainly, if the S&P makes a run, which we'll go back to that in a second. If the S&P makes a run, we could go back up to 130, 150, easy. If they get their act together and there is a Eurobond, again, hey, what's to stop this freaking S&P to launch back to 1405? Let me tell you something. A Eurobond, Greece worries, pretty much over. J.P. Morgan, Timon testifies. He does passes with flying colors, tells Congress to go screw themselves within the law, stops the investigations dead cold, answers all questions, doesn't take the fifth, and a Eurobond? Ooh. Certainly, I wouldn't fight that. But, I mean, you look at this S&P. I mean, we are very oversold. And, again, we are certainly due for a big rally. I mean, you look at the Fibonacci on the S&P. You could do it from multiple levels. You could do it from here. They're a little up. So we have different levels that you can do it from. I think the most recent is the most appropriate. Statistically more appropriate. But you look, certainly big resistance here at 1340. I think that's the first stop. That should be easy. 1330 seems easy. Easy. Say it again. Easy. Unless there's some terrible news out there. Unless Germany says, no, we're not doing it. Which they might. Look at this euro sterling continuing to push higher. It stalled a little bit. Let me tell you something. We've got numbers coming out tonight from London that are going to suck. I love this pound short. Blue Horseshoe loves pound short. And I've been nailing this pound, baby. Ever since that inflation report came out last week, well, we got the same one coming up pretty much. Inflation is going to come in. CPI is supposed to tick down year on year to 3.1%. It could be even lower. Core is supposed to drop to 2.2%. That's heading towards the inflation target of 2% at the MPC, and their numbers are falling off a cliff. London has to do more stimulus. Japan, I don't think Nikkei reporting today they're not going to. That would be very bad for dollar yen, even though dollar yen did hold today. If the BOJ does nothing on the stimulus side, you're going to see dollar yen come in more. Bond yields did nothing in the U.S. VIX was down nicely. 173, big freaking deal. Freaking 10-year. Dollar Canada, gorgeous reversal. We nailed that sucker today. Gorgeous reversal. Love it. Short. Easily come in. Par. Bang. Dollar Swiss, gorgeous reversal today. We had the outside candle, rallied, failed. Now we get continuation to the downside. Easy. Say low 93. These aren't huge trades. You take half off, let the other half ride. Remember, the market's very oversold. Dollar index is very overbought. And we're really not even that far from previous day lows. We reversed nicely, but that just means we have more to go. Certainly catching up to the EMAs. And again, you do your fib. $80.55. First stop. It's only 40 cents, but it's enough. Sterling. Now again, sterling. How about that pound Swiss? Sterling is going to lag. Now, it might rally, and you might want to be long it as a hedge. But I think these numbers are going to suck tonight. And we got big numbers coming out of the U.S. They got this market up for who knows what reason. And we could have a gorgeous turnaround Tuesday. 1340 on the S&P. Richmond Fed. Very important number. Remember, Richmond Fed last month was at 14, a blowout. If this thing comes in a disaster like Philly Fed, which now they're trying to discount. I love it. Jim O'Neill trying to discount Philly Fed. Okay. If Richmond's bad, say goodnight. But obviously Richmond good. Or, holds 12 versus 14. I'll take that. It was supposed to be 8 last time, I believe. Your existing home sales out of the U.S., those are supposed to increase as well. So we'll see. Listen, U.S. numbers, I don't know. I was taken by surprise myself in Philly Fed, and I think that's going to lead more people. Bad news is good news. You get weakening numbers, they're going to start talking about QE3. Listen, last I checked, the stimulus isn't ending in June. The U.S. wasn't it a 2-year stimulus? It's over. Isn't Operation Twist over in June? It's over. So again, sterling, I think, bounces, but I think any big rallies in sterling, you look to sell. I think cable across the board looks very weak. Pound Swiss we see coming in, continuing to come in. Thank you. It's only down 250 pips. Big deal. Look where this thing has come from. Got more to go. You do your Fibonacci. Fibonacci says, oh, baby. Certainly 147.50. Another 100 pips. I think you look to take it off there. Sterling yen, certainly coming back nicely. I still think it's a sell, but easily could bounce to 127. But again, that Nikkei report really should keep pressure on dollar yen. Bond yields really not much higher today, and you get no stimulus, no soup for you. Dollar yen coming in. Love it. Now, again, we got a New Zealand inflation report tonight. I think that's going to be hot. I like pound Kiwi better, but pound Aussie dollar looks like it's going to run more. Aussie Kiwi are so oversold. Even pound Canada looks a little toppy. Could easily come in. I would have liked to have seen it bounce a little more, but it didn't. But again, with the numbers coming out tonight with sterling, I think Euro sterling rallies, you see, and commodities look good. You could see a nice continuation. This pound Kiwi, oh baby, it's only run up, 1,800 pips. It's not going to come in. Oh yeah, watch it. You look at this New Zealand dollar. Now, if some of you never traded this pound Kiwi. Trust me, this thing flies and moves in chunks. So you really want to be careful and pick your spots. Has a wide spread with most brokers. And for every pip in New Zealand, this sucker moves too. So you really want to be, yes, cable focused, but that Kiwi dollar, sometimes it's 3 to 1. But you look at this daily chart. Took out previous day highs. I would like to have seen it taken out previous day lows, but this baby is so oversold. And what I love is when they break the channel lines, break it down to break it out. And now we're clearly above it. Broke this one. Broke this one. So I think we should easily clear the tower 77 and look for the good old 777 jumbo jetliner. Again, you do your FIP. I think we continue on this bounce. And again, 7787. Okay, close. Lucky sevens, baby. Take the trade. Be 130 pips from here. And again, Aussie dollar. Closing very nicely. Double bottom. Didn't take out previous day lows. I guess you could say it held. Due for a big bounce. Par 50. Easy. Let me tell you something. And if there is, remember, gold on a German, on a Eurobond, more printing of money, gold would fly to the moon. Close your eyes. It's up $100. And buy. Up 50, who cares? Buy. More printing of money. U.S. will be next. Now, gold obviously has had a nice little run here. I think, maybe we back and fill a little bit. I got to tell you, certainly look like a nice triple bottom here. And if Bernanke's forced to print, we could be seeing an opportunity. I think gold's going to come back and fill. But you get it back and fill to a Fibonacci. You know, 1570. Certainly be worth a look. I wouldn't chase it here. 4-day run pretty much from the lows. So again, to summarize, I believe there will be more rumors, more good talk that things are getting done. I think the euro is going to continue to rally, most probably into Wednesday's Holland meeting with Germany regarding a Eurobond. There might be more Spanish reports, maybe pushing them, maybe hints of something they're going to do. And I think we get more of a rally. But I think that maybe towards tomorrow, reality check, and the Germans squash it. So we could be set up for a nice turnaround Tuesday. Or we get one-way Tuesday where they confirm they're in talks about a possible deal. Holy crap. We rally even more on the news, and then who knows. But we're coming up to a very important spot. This is the Lehman moment. This vote in June, they cannot allow to happen. If Greece goes from the euro, it's the beginning of the end. I'm amazed that J.P. Morgan said there's a 10% chance that Greece stays in the euro. 90% or 60 and 30. 60% they're gone, 30% some restructuring. I don't know. Wow. I don't think they realize. This is a Lehman moment. There are counterparty risks. There are so many cockroaches under this rock. They don't want to open it. And what they don't realize is it affects global trade. How about the U.S. Treasury now accepting direct purchases from the Chinese, cutting out our bank middlemen that make fortunes off the Chinese? How can we do that? Once again, taking money away from the big banks. The Obama administration is hell-bent on now crushing them. This Jamie Dimon ammunition, it's almost overwhelming. I don't know how, unless he just opens the books and shows everyone the trades, gets it over with. Leave me the hell alone. Close the books. It's over. But if there's more of this jockeying back and forth and hiding and not knowing, that's not good for the markets. So I just think that this Wednesday is turning out to be big. Because if Holland gets turned down, then you're talking about France and Germany completely butting heads. What happens then? Then Germany talks about leaving the euro? Holy crap! Euro would be 80. 81. That was the lows, I think. 85. The Deutschmark will be trading at double par. Telling you. So I really think we're at this moment. I think the Germans don't get it. They have to worry more about deflation than inflation. And just because they're doing well, it's like, California. Let's say California is doing great, but New York City terrible, the Midwest terrible. Well, I mean, as a whole, the nation's not doing well. Germany doesn't get that. All right. Anyway, again, hopefully you got my tweets today on the reversal. Voice of Forex on Twitter. I tweeted them out, people. Freebies. I gave it to you, baby. Call that reversal out, mama. To the moon. But if you're looking again, follow me on Twitter is Voice of Forex. Follow me on Facebook. Fan page, Voice of Forex. Posted on that too. And of course on YouTube, Voice of Forex. Andrew Spanton. Info Try my premium service. The only voice you'll ever need who truly loves to make you money. Have a good night. Remember, that pound, muy malo.